Welcome to This Week in Money. I'm Jim Goddard. Today, Trends Journal publisher Gerald Celente will tell us where he thinks the world is going with British and French elections coming up, the uncertainty of Trump's leadership, and is China a good place to do business with? Joseph Schachter talks about his new energy report and how it gives a very comprehensive picture of the business of oil and whether the U.S. or Canada has the best energy investment potential. And Ross Clark from CIBC Gundy will run down the major equity markets for us. Plus, at the end of today's show, we'll have a company showcase update with American Manganese CEO and President Larry Reaugh. We'll talk to Ross Clark right after this.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark. He's an investment advisor at CIBC Gundy in Vancouver. Welcome back to This Week in Money, Ross.
Good to be with you, Jim.
Canadian financials had a rough week. How come?
It started off, this has been a story that's been developing over the last couple of months. Home Capital, which had been basically borrowing a lot of money short-term, basically day-to-day savings accounts, $2 billion worth in the savings accounts as of a few weeks ago, started to see a run on that capital. And by the time we got through the end of the week, they had gone from $2 billion down to somewhere around $600 or $700 million. So that draw on capital and what it meant to the mortgage holders, in terms of their ability, the ability for Home Capital to continue to do financings and pay their existing debts that they have incurred, and the money line that they were able to get, really put all the Canadian financials under pressure. Even the largest of the banks. You got I guess across the board, you've had a good 10 to 15% drops from the highs of the year, and the bulk of that happening just at the tail end of this week. So it's a contagion feeling to it, where when one company has pressures like this, everybody gets tainted with it. And I think as we move through the next couple of weeks here, clearly there's going to be opportunities of stocks that were hit that realistically shouldn't be, that have got longer-term financings rather than short-term paper, and will bounce back pretty well. So, I always look at these type of events as opportunities more than anything else, especially for those of us who have not been invested in those products. You look for the solid ones that have just had indirect pressure on them.
The NASDAQ and S&P 500 had a terrific week. Is there much behind it?
It's starting to become narrower and narrower in terms of the participation in the move, and that's, and here we are at the end of April into literally the end of the best, quote, 6 months of the year. Market's starting to look a little bit tired up here. NASDAQ all-time high, managed to hold up towards the end of the week. S&P having a bit of trouble, and everything had gapped early in the week based upon the election, the vote in France, but didn't seem to have much momentum after that. And some of the leadership that we had, we talked about Canadian financials being down, but also, these U.S. financials, they're well off their highs and just seem to be having a bit of trouble setting up the next leg to the upside. You've got technology stocks, the semiconductors have still been leading, and the FANG stocks have been reasonably good, but how long can you go with just a very, very small leadership base here?
The Canadian dollar seems to have fallen rather rapidly from 75 to 73 cents.
Yeah, the last couple of rallies in the oil market should have had a better reaction in the Canadian dollar. And then as oil's been back down to that $48 dollar level and settled off from maybe 49 and a quarter-ish, Canadian just doesn't seem to have any life in it. You've got the lumber duties that are coming into place, but then on the other side of the coin, NAFTA, which now seems to have maybe some more life left in it, didn't provide anything in the way of support. So Canadian dollar been under pressure all week. If anything, it's starting to get a little overdone. Just like some of the other commodities, if we take a look at it, like the precious metals, we've been led down by the silver market recently and the mining stocks. Gold's been holding up a little bit better, but that sector in itself, precious metals-wise, looking oversold enough to see a bit of a bounce. Maybe Canada gets a bit of a bounce with it as well.
Ross, thank you so much for your help.
Nice to be with you, Jim.
My guest has been Ross Clark, investment advisor at CIBC Wood Gundy, Vancouver. Coming up, Gerald Celente, next on This Week in Money.
Always consult your investment professional before making any investment decision.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Gerald Celente. He's the publisher of the Trends Journal, available online at trendsjournal.com. He's speaking to us from historic Kingston, New York. Welcome back to This Week in Money, Gerald.
Hello there, Jim.
A lot of turmoil in the world. Are we trending towards World War III?
It's if it is, it would be, what they asked Einstein, what weapons will they use in World War III? And he said, I don't know. He said, but they'll be using sticks and stones to fight World War IV. And so if it's a world war that they're going to lead us into, it'll truly be the war to end all wars and end most of life. And the rhetoric that's heating up from the Trump administration is the worst I've ever seen in my lifetime. So whereas we're forecasting it, we don't think it's going to be an issue with North Korea. I mean, North Korea is a nothing little country, and everybody's making a big deal out of it. Oh, they shot off missiles. Yeah, so what? I mean, look at America, just launched an ICBM the other day, and launching missiles all the time. And I think it was North Korea that invaded Afghanistan, isn't it? That's been there for some 16 years. Or was it North Korea that overthrew Saddam Hussein because he didn't have weapons of mass destruction and ties to Al-Qaeda? Well, maybe it was North Korea that, along with France and England and the United States, that started the war to overthrow Gaddafi over at Libya. And Assad has to go in Syria and bringing more troops down into Somalia. I think that's all North Korea, isn't it? Or is it the United States and its coalition of the killing that are also slaughtering people in Yemen? The hypocrisy of this is outrageous, and it's not being called out by the prostitute media. And as we're looking at it, we're forecasting the incidents are going to occur between Iran and Israel, provoked by Israel, false flag attack. They'll blame Iran, and the United States will become involved in it. Because we say this, because of the rhetoric coming out from Netanyahu, from Trump, from our Secretary of State Tillerson, and our Secretary of Defense James, quote, Mad Dog Mattis. This adult calls himself Mad Dog. And when you read his quotes, he certainly deserves to have that label on his name, and anybody could Google it up. James Mattis, a former general, saying things like, those guys over there in Afghanistan, if their women doesn't wear a veil, they slap them around. Those are good guys to shoot. I mean, things like that. I'm paraphrasing that, but that's basically the aspect. So when you hear the rhetoric coming up saying that Iran is the world's greatest sponsor of terrorism in the world, and on, to us it looks like, and Netanyahu, he's been going on now ever since he painted that cartoon bomb of a nuclear weapon going off that he showed off at the UN several years ago, that Iran was ready to ignite a nuclear weapon. We think it's going to be coming from Israel, and the United States will be involved in it, and that could actually be the war that would be World War III.
President Trump ran as the so-called peace president. What happened?
Well, he's backtracked just like the rest of them, like backtracked Barack Obama. It's one liar after another. I'm going to, those low interest rates are terrible. Well, they're not so bad. That China, they're currency manipulators. Well, no, they're not. And of course they're not, by the way. Chinese have spent more than $1 trillion in propping up their currency and trying to do everything they can to stop outflows. His reversal on the Export-Import Bank, one reversal after another. He's just another sociopath or psychopath that lies his way into office. It's no different than the guys and girls you knew in high school and college that wanted to be class president and head of the student council. The overly ambitious, the insincere, the brown noses, and the suck-ups. So they'll do anything to get into office.
Do the countries that Trump is threatening have central banks?
I'm sorry, what?
Do the countries that Trump has been making noises about have central banks?
Do they have central banks? Well, North Korea doesn't. Iran has to an extent, I believe. But again, these are, these countries, what are we talking about? North Korea, what do they have, 20-something million people? Iran, 70 million? And we're a country of the United States, a country of 325 million? So they're tiny countries they're going after. Again, all of them. Think of them. Afghanistan, Iraq, Libya, Syria. They're bullying the little guys.
Does Canada's Prime Minister Justin Trudeau have any hope of being able to stand up to President Trump?
No, matter of fact, he's banging the war drums as well. And then when Trump illegally sent 59 missiles into Syria, the Western world applauded it. And it's a violation of international law. Syria's no threat to anybody. Oh, you don't like Assad? So what? I don't like the governor of New York. That doesn't give me a right to try to kill him or overthrow him. This is the immorality has become the new normal. So I think he's not going to be able to stand up to him in any way, just as you saw with what's going on with the lumber tariffs and now the dairy tariffs coming out against Canada. And by the way, I'm in favor of tariffs. You have to. I'm not personally. I'm not saying whether it's right or wrong, good or bad. I'm just saying personally, I approve of them. If you're getting cheaper product coming in from foreign countries and is putting your people out of work, then that's your decision to make. But this isn't free trade. It's people that have more of what they have to sell, dumping it in markets where they can get more money for it.
President Trump keeps changing his mind about NAFTA. The other day he said, I'm going to bail out of it. Now he says, I'll stay in NAFTA if I can negotiate a fair trade. Is that a good move?
Again, he's always all over the place. I think renegotiating NAFTA is a smart thing to do. And a person like Wilbur Ross, who's the Commerce Secretary, who has a reputation of being a very tough business person, I think that's the wise kind of person to have in there to renegotiate the deals. Again, there was a thing called a chicken tax, for example, under the Johnson administration in the 60s. And what was happening was Germany was dumping cars into the United States, Volkswagen buses, etc. But what they did was the United States was dumping chickens into Germany, and to protect their chicken farmers and suppliers in Germany, they put a tax on the chickens. So Trump retaliated, and Johnson retaliated and put a tax on the incoming Volkswagen vehicles, and that tax stayed on from foreign vehicles until Bill Clinton pushed through NAFTA. So what I'm saying was, it wasn't hurting the nation, either one. They protected their own industries at home and continued business as usual. So when we're looking at these big tariffs or tariffs and import-export, who do they usually hurt the most? They hurt the bigger manufacturers the most, the bigger multinationals the most. They don't hurt the local growers. They don't hurt the local builders. They don't hurt the local manufacturers. They hurt the multinationals.
It's been pointed out the tariff on softwood, mostly from BC, will throw anywhere from 3,000 to 6,000 American home builders out of work.
That's what they say, and that's a high assumption, because right now, by the way, home building in the United States is pretty low, and the reason is because young people can't afford new homes. That's one of the reasons why you're seeing prices going up so high in the United States. So that thing about it's going to cost so much more to build, yeah, probably to some extent it will. But again, maybe the wages of the laborers will go up as well. So if your wages go up and the cost of products go up, what would you rather have? Make more and pay more, or earn less and pay less? And right now we're in an earn less and pay less society. So if you're earning more and paying more, you could buy less, but you're still earning more. So I think there's an upside to earning more and paying more, rather than paying less and earning less. Because in the United States, 51% of the people working full-time jobs are earning $31,000 or less a year.
Is globalism or protectionism the leading trend?
It is. And what we saw in France, the election, again, it was that's another election of the lesser of two evils. And we saw that Le Pen didn't do as well as a lot of people had expected. And of course, she's anti-globalization, anti-Euro, and and pro-protectionism. And Macron is not. He's very much of the current world order. But he won. So far, there's another round, of course. But I don't think there's going to be a very high turnout. It's kind of like the United States, where we had both candidates with 60% unapproval ratings. But globalization among the average, the majority, I would say, majority working population, they're against it and they're for protectionism. It is a trend.
The U.S. dollar had an outside month to the downside in January, again in March. Is that signaling a bearish trend for the U.S. dollar going forward?
We don't think so, because the other currencies they're not going up because of their economies are doing so great. The dollar's coming down because there's less talk about interest rates going up. There was over a 60% odds chance that interest rates would go up again in the United States 3 times. Now that number's down to 36%. So it's really an interest rate issue. If interest rates go up, and they're going to have to go up at some time, we believe the dollar will strengthen again, and that compared to the other currencies, the dollar is in better shape.
We'll have more with Gerald Celente coming up on This Week in Money.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN AF. surrounded by world-class gold deposits and mines. Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
I'm Larry Reaugh, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're chatting with Gerald Celente, publisher of the Trends Journal. Gerald, are market and consumer confidence indicators signaling a market top?
Not really. The consumer confidence levels in the United States are at decade highs. The markets have gone up on hope and economic change you could believe in, and that is a radical tax program by Trump, infrastructure rebuilding, and deregulation. And so far, that really isn't playing out to the extent that the markets anticipated. So we believe there's going to be a pretty sizable market correction, probably about 10%, but we do not see a crash at this time. Again, absent a wild card event, like we began by talking about World War III, or a terrorist strike, false flag, or real. Something like that will really drive the markets down. But we see a market correction and not a market crash.
So you don't really think we're going to have a stock market collapse like we did in 2008?
Not right now. No, we don't see that. We don't see that at all right now, considering the trends that are underway. We go back to, when did Trump get elected? November 8th. So we're going on November, December, January, February, March, April, and we're going into May. It's almost going to be, a 6-month rally. That's pretty sizable. And so when something goes on that long with that much strength behind it, and you're seeing the NASDAQ hitting new highs, it's worth looking at. However, it's also important to understand that it's only a few stocks in the S&P and the NASDAQ that are driving most of the market sectors up. So that's a signal to look at. But overall, we don't see a crash, but we do see a sizable correction.
Is the automobile market in trouble?
It certainly is. The subprime auto loans, you don't have a job, you don't have any money in the bank, you got a lousy credit rating, don't worry about it. Come on in, we'll sell you a car. And so that subprime rate has really brought a subprime loan binge has really built a subprime bubble. It's not equivalent, of course, to the real estate bubble, but it's sizable. And now you're looking at auto sales declining pretty rapidly. And when you go to the last quarter of 2016, they were doing everything they could to sell cars. So we see a subprime auto crisis happening, and some of the banks that are very heavily involved in it are going to take a hit, as well as other, agencies that loan money in this area.
Subprime mortgage lenders in Canada are now in trouble. Is this a canary in the coal mine warning of coming real estate crash?
We don't see, again, a real estate crash at this point because of the subprime madness isn't involved in this one. Will there be a decline in prices? Yes, but we don't see it as a long term at this point. We see it as, again, a correction. Considering how high prices have gone up, they'll pull back, and they may pull back for a year or two. But, absent a major catastrophe, and again, it's going to take a wild card event to make that happen, we don't see it happening. We don't see a crash, we see a correction.
China's imposed additional currency and Bitcoin controls. Are these controls likely to result in a bear trend for real estate around the world?
We don't think so. One of our top trends for 2017 is China, buy and sell it. And that's what's going on. There's a country of 1.2 billion people, and they've gone. They're going to have their problems. I mean, it went from about $900 billion debt level 20 years ago to 30 trillion today. So they're trying to do everything they can to keep this Ponzi scheme going. But you look around the world, regardless of what people are doing, whether it's countries are doing or cities or states are doing, in trying to prohibit the Chinese from buying more, it slows it down a little bit, but doesn't stop it. Again, they have so much money being generated over there, and in all the new businesses they're entering into, they're going to be investing worldwide. And when you look at a lot of these investments, where they're coming from, they're coming from companies that are really just state-run companies by China. So we see some, again, reversals to some extent, but the trend of buy and sell China is going to continue.
How is the consumer debt trend going?
Well, consumers in the United States are building up more debt. The college student debt level is at $1.3 trillion. You have some 300,000 adults that took loans out for their kids that can't pay them back. They haven't paid back in a year. So we have a real debt problem going on, and that's reflected, by the way, in soft retail sales and less people going to restaurants. Again, the rich are getting richer, but most everybody else is either treading water or getting poorer. So the debt levels are really taking their toll. And again, that's another reason why Trump is so in favor of low interest rates. It's keeping the Ponzi scheme going. And when you look at his tax breaks for corporations, what's that going to do? Corporations are sitting on a lot of cash right now. What it means is there'll be more stock buybacks, and that'll keep market activity alive and keep pushing markets up, even though the valuations are out of line.
Is there a trend in public and private pensions?
Oh yeah, I mean, they can't pay for them. How many people take jobs, in education or working for the state, city, or municipality because they want the benefits? They may not dislike the jobs, but they take them for the benefits. And what you have now is you have a real crisis ahead of, particularly in the states, in the inability to pay off these, whether it's from Social Security to pensions and private and public. By the way, that's one of the reasons why so many states, and including Canada, of course, are legalizing marijuana. It's to bring in more tax revenue. Same reason they did it with gambling and lotto and all these other things. So they're really hurting. There's a huge crisis ahead, particularly with the aging population. So yeah, there's a real pension bubble ready to burst.
Is there much demand for commercial lending?
It's down, and it's down across the board. So that's a signal, of course, as well, that the concern about rates going up and the concern about overbuilding, whether it's in commercial or in real estate, multifamily and single. So there is definitely a slowdown, and it's one of those canaries in the economic coal mine to look at. Again, we see a backtrack coming soon, a correction, and these are some of the signals that show it.
What do you see ahead for the French and British elections and the European Union?
The French election, all they did was they elected an Obama so far. Of course, it's not over yet, but with Macron, he's done nothing. Nothing. And it's not a conspiracy theory to say that he's tied to the banksters. Where does he come from? The Rothschild Bank. It's a fact. So it's just more of the same there. We're going to have to see what happens in Italy. That's going to be the big one with the Five-Star Movement and the elections coming up there. And Brexit's a big one as well. That's going to be, but of course Brexit aren't in the Euro group. They have their own currency. But Italy, of course, is in the Euro group, and they don't have the Italian lira anymore. They have the Euro. So if the Five-Star Movement gains traction and they could pull out of the Euro, that could be the end of the Euro group, the Eurozone. And the UK, of course, is leading the way with Brexit.
What bullish trends are you watching?
Well, the bullish ones, again, I mentioned marijuana. That's a big one. That's going to continue to grow. That's like lifting prohibition in 1933 in the United States. It's just at the beginning. Not all states have the same liquor laws, and not all states have the same marijuana laws. And we don't see the federal government really clamping down on it. And you're even seeing, mainstream newspapers like USA Today just this week running a big story about how medical marijuana is helping children with autism. And the leaders in this field, by the way, are coming out of Israel and Spain in medical marijuana research. So we see that as a very big trend. And again, we know what's going on with China, and we're recommending to our clients and subscribers, do business there any way you can. Sell them what they want and buy what you need if you could buy something that you can't get here. And it's more about just price. And that's the other one, by the way. There's a big gap in terms of in elegance and grace, and to start filling the mainstream market with more of that's really been failing, particularly on the retail sector. And that's the other one with the whole retail sector. You're seeing the fall of the malls, something, of course, that I forecast many years ago in writing over and over again. But there's the opportunity on the other end of that. What happened when these malls opened up near small towns? They killed the small town businesses. Now with the malls closing down, the small town businesses are starting to pop back up. So that's the thing. Become an on-trendpreneur. Look for the opportunities that the bigs can't fill because the bigs are going bust. A lot of them are. Look at the retailers that are closing up. It's not only because of online. That's taking some of the, obviously, it's taking a chunk out of the retail business. But it's bigger than that. People are looking for local. They're looking for national. They're looking for homegrown. And they're looking for the small town experience. So in any areas where that could be revived, those to us are going to be the next hot spots.
What bearish trends are you watching?
Well, the bearish ones are obviously on the war front. The fear and hysteria never stops in this country. Every day, whether it's North Korea, whether it's Syria, whether it's, ISIS are coming, whatever it might be, look at the airports, my God, look, they've taken the fun out of flying. So fear and hysteria, the drum beats of war growing louder, and more militarization of the police in the United States under Trump, and more coalescing of the 1% gaining more of the assets. And that's happening when you look at Trump's tax plan. It helps the wealthiest of them. When you look, for example, at the marginal tax rate, they're looking at cutting it, bringing it down somewhat, and that's fine. But it's helping the rich the most, because when you go back to the Eisenhower era, it was like 90%. So why shouldn't the Buffetts and the rest of the multi-billionaires pay their fair share? And when you look at the Trump tax plan, it basically helps mostly the major corporations, the billionaires, doing away with the state taxes and that kind of thing. And again, the marginal tax rate being lowered for the people that could afford to pay the taxes the most. They're the ones that are going to benefit the most from this plan.
Did anybody expect different when your cabinet is full of billionaires?
Of course not. And the Goldman Sachs gang besides. Whether it's Mnuchin, whether it's Cohen, Bannon, one after another. It's filled with them. And it's also the Trump administration's filled with the military-industrial complex, defense contractors, and generals. So when you say my greatest fear, that's what's happening in those areas.
Gerald, how can people find out more about the Trends Journal?
TrendsJournal.com or TrendsResearch.com for all the information. And it's more than just a Trends Journal. We do Trends in the News broadcasts each weekday night. For the mainstream media is trend ignorant. So if you want to be on trend, we suggest you consider subscribing to the Trends Journal. You get the Trends Journal, Trends in the News broadcasts, Trends Monthlies, and Trend Alerts each week at TrendsResearch.com. And it's only $99 a year. And we know for people that are having a difficult time there's a discount request page. We try to make it available to everyone.
Gerald, thank you so much for being on This Week in Money.
Thank you, Jim.
My guest has been Gerald Celente, publisher of the TrendsJournal.com. He was speaking to us from historic Kingston, New York. Coming up, Joseph Schachter next on This Week in Money.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Joseph Schachter is the founder of the Schachter Energy Report online at schachterenergyreport.ca. He's speaking to us from Calgary, my hometown. Joseph, welcome back to This Week in Money.
My pleasure, Jim. It's a pleasure to be with you.
Your premier issue of the Schachter Report has just been published. Can you tell us about it and how are people reacting to it?
Yeah, thank you very much. I've been working for the last 15 years with Maison Placement on the institutional side, and for years speaking at conferences or at being on the radio interview or TV, I've been asked to do something in the private sector for the private client individuals, and I've started it, thinking about it over the last 4 or 5 months, and then 2 months ago we made the decision to do it. And so our first issue has gone out, and it'll be expanded from what I was doing with Maison. Maison only wanted to cover larger caps, intermediate caps. I'm going to cover large cap, intermediate, and junior, both in the energy and in the energy service sector. So it's a much broader product than I've had in the past. Where I have been of note as having, built a reputation was on the macro side. In 2014, I got bearish on energy because of the build in inventory, and then stayed bearish through, early 2016 when I gave table pounding buys because the market was oversold at 26 and there were great bargains available. And then midsummer of last year, things got overbought again, and I started seeing the build issue and the U.S. production issue of big lifts in the shale production. And so we turned bearish again. We are bearish now. Right now, we've been calling for that we're in a no man's land between U.S. 46 a barrel and 56 a barrel. If it goes above $56 per barrel for WTI, the bulls are right. If we go below $46 a barrel, the bears are right, and the bulls will have to react accordingly. We're at 48.50 or so. We're down 2%, almost a buck. So it looks like we're getting close to that 46. And as we get weekly data from the EIA, the next OPEC report, and it shows that, number one, some of the OPEC countries are increasing production like Libya, and if it shows the U.S. EIA data that we're seeing growing U.S. production, which we had this week, the big thing, though, is that starting May 14th, FERC, the Federal Energy Regulatory Commission, has approved the new pipeline from Dakota Access to start up production of 480,000 barrels a day. So even if 100 or 150,000 will be rail that stops going, there will be a bump up of over 300,000 barrels a day in U.S. production data, starting with that. And with the U.S. last week being just under 9.3 million, we will be above the record levels of 9.6 million. And that, I think, is going to be a big problem for OPEC. So I think we bust 46. I think we bust 40 during May. And then I think during June, July, I think we have a shot at even breaking into the low 30s, unless OPEC does something magical in terms of not only extending their production cuts, but increasing them by another
1.5 to 2 million barrels a day and having a high compliance level. If they don't, the only direction that I see based on the fundamentals is much, much lower oil prices.
Looks like President Trump is targeting Canada's energy sector. What is this likely to do to Canada's energy sector?
Well, I think that the people are taking it a little bit too pessimistically. U.S. exports of product is rising, so the refiners on the Gulf Coast are very happy to be buying Canadian heavy crude, processing it and exporting it. And U.S. exports of product have risen to levels we haven't seen in years. I've got a chart in front of me. It was under 50,000 barrels in 2013. During 2015, about 400,000 or 500,000. It's now over almost 1.2 million barrels a day of U.S. exports. And so the benefit to the Americans is, put on the XL pipeline, put on Kinder Morgan in BC, and put on the reversal of the Enbridge Line 3, and a lot more Canadian oil will be able to go down into the States, be refined there, which of course is jobs, and then export, jet fuel, gasoline to Europe and Asia that are in need of those products, and it becomes a balancing of the trade, which because the U.S. is right now sitting with a record trade deficit, so being allowed to sell American oil or American product around the world will be a big benefit to the U.S. Net export situation.
What effect will Trump's approvals of the Keystone XL and the North Dakota pipelines have on the oil market and stocks?
Well, those are XL. Of course, we need a timeline of when they can complete it, and that is still up in the air. At least we know, as I mentioned earlier, the Dakota Access comes on May 14th because it's got FERC regulatory approval. The issue of Kinder Morgan is still, or the Trans Mountain Pipeline, is still up in the air. The timelines, when are they going to get the approvals, the rights of way, the issue of the shipping coming into, the BC Harbor, Vancouver, Burnaby Harbor, and of course any environmental, attempts to slow the process down. So we may be talking 2 or 3 years before, the West Coast Kinder Morgan line has an impact. XL pipeline could be done, potentially, in the next 1 or 2 years, and the Enbridge reversal could be on the first. So, having all of those lines is necessary if Canada is going to continue to expand its SAGD. There's lots of thermal potential. This morning I sat in on the Suncor conference call, and they're talking about SAGD potential of 400,000 or 500,000 barrels per day. That they could move now that they've, they're on their way to finishing Fort Hills, which is the big project that they have with Teck. That'll be the last open pit, large kind of thermal project. But going forward, the technologies of SAGD are getting better and better, and that's really the big upside for us with our heavier crudes.
Can the U.S. be self-dependent for oil, and what could this mean for Canada?
The Canadian market is a separate market. If the politics gets ugly, the Canadian dollar is where we see the pain. The Canadian dollar, going back a few years ago, you go through 08, 09, or you go through any of the other, 2015, 2016, the Canadian dollar is where we see the impact. We had in 2002, we had a 62-cent Canadian dollar. And then, of course, if you remember when we had $147 WTI in 08, the Canadian dollar was trading at 110. So there's a lot of parts to the puzzle. The price of the commodity, if I'm right, it's going down. Then the Canadian dollar, which is 73.50, could easily break 70 and probably be in 64, 66 range sometime this year. So. If you're a Canadian and you have plans to go to the States, I'd load up on U.S. dollars now.
Going forward, do you think the better energy investments will be in Canada or the U.S.?
I did some work on both the Canadian and U.S. performance in 2002 to 2008, and what I found was that the price of oil moves the most. So in 2002, we were sitting around under $20. And we went to 147, so the price of oil went up 7.4 times. The U.S. stock prices went up 4.9 times, and the Canadian stocks went up 4.4 times. So we have almost similar comparisons. And of course, when the price of oil recovered, the Canadian dollar went up from 62 cents to 110. So, if you bought U.S. securities, you gave away a lot of the gain because the Canadian dollar improved. So the net effect in Canadian dollar terms was the Canadian stocks outperformed U.S. stocks when we have a recovery in the price of energy. And if I'm right that we go down to the low 30s sometime, Q2 if OPEC doesn't do anything, Q4 if OPEC tries to delay the inevitable, then I think there's going to be a great bull market that starts in late 2017, and it could be a 6 to 8 year bull market. And the reason that I have such a bullish scenario going forward is that the proven reserve life, which of course is how companies get their production from proved producing. We had 14 to 16 years in the 1970s bull market. That fell to 10 to 12 years during the period of 1981 to 1999, 2000. That bull market, when we had from 2000 to 2008, again, the companies, because they wanted to get production on quickly and get cash flow, they again lowered their proven reserve life indexes to 7 to 9 years. And during the last period from 2008 to now, we have proven reserve lives of only 6 and 7 years. So it means the treadmill is faster to replace your production. And if companies want to grow, they need to spend more than the cash flow, which means you have to have access to capital. And with so many stocks being battered here, trading below book value, with bad balance sheets in many cases, I think it's going to take a number of years for the foolhardy problems that we saw in, let's say 07, 08 or 2012 to 2014 come back again. I think the industry will be rational in, let's say, 2018 to 2020, and then the euphoria, the overspend, and the lack of, controls over costs, because the focus is getting production on as fast as possible, because the price of oil ain't going lower, it's going higher and higher. The stupidity comes back to the sector, and of course, we've seen that stupidity in the past, and then when the periods of the cold shower come, we have the bankruptcies. We had a few small bankruptcies occur in 2015, 2016, but for some of the people who have a little gray hair and have followed the industry like I have, they may remember the name Dome Petroleum.
Oil stockpiles have declined for the past 3 weeks without the price of oil rallying. Is oil currently in a bull or bear market?
Clearly, it's in a bear market in my book, and the nuances from week to week, as we get, when the refiners are moving, the numbers are very, very small. If you take into account the storage number that we just saw, that everybody got excited about part of the way yesterday when commercial stocks fell by 3.6 million barrels. The problem was total stocks went up by 6.1 million barrels, including the SPR. So a lot of the crude that came down was created into product. The other thing to keep in mind is that the net imports went up and net exports also went up last week, as I mentioned earlier. So the reality is the data that came out yesterday had a few bright signs for the bulls, which was the crude oil decline and the imports. But the other side of it was that the U.S. production went up by 20,000 in the lower 48. The total stocks went up by 6.1. And the most important negative comment that came out was product supplied in the U.S. or consumed in the States was 19.1 million, and it was down 330,000 from the week before, but more importantly, 718,000 barrels a day below the year before. That's straight from the EIA data. So it's showing that U.S. demand for crude oil and consumption of product is down. Part of it, of course, could be the sluggish U.S. economy, which may be sputtering at 1%. But the other one is the U.S. Fleet of cars. Auto sales have been very strong in the last few years, so the new cars have so much more fuel efficiency, and the cars that are being junked are, of course, much higher mileage, lower mileage providers and higher, guzzling. so that the fleet is now more fuel efficient, and that is impacting U.S. demand. And worldwide, we're not seeing much demand growth in Europe. We're not seeing in Japan. India's numbers were down in the last month from the OPEC report. The only place where you can say there's sustainable ongoing growth is in China.
Are you currently bullish or bearish on oil service and oil refining stocks?
I think right now, given my overall view is bearish, I think I'd like to see the bust to $40 U.S. And if we get down into the low 30s and they knock down all stocks, service stocks, intermediates, refiners, large cap, medium cap, I think everything gets shellacked. If you take the S&P TSX Energy Index, which is right now, I'll just get the quote for you. We're sitting right now at 193.72. My guess is minimum we're going to 150, which would be 20%, 25% decline. And I think we could go down to the low of where we were in January, February of 2016, which is in the 120. So if that was the case, we'd be looking at a 35% decline. So I think it's a risky time for investors to be, if they're using leverage, get out of leverage. If they have companies with bad balance sheets, get out of those companies and build up cash reserves, because when this thing finally shakes out, we are going to have one of the best buying opportunities we've had since Jan-Feb 2016 or March of 2009, and the multi-year bull market that will follow should do extremely well. I think the basic index, which was at 470 at the high on the S&P TSX Energy Index, could get exceeded in the 2021-2025 period as this bull market unfolds. And again, I think, as I said before, it should start by the end of this year or early next year.
How does the commitment of traders look for oil?
Well, that's something that's really crazy. Speculators continue to load up on the futures position. So if you take, there's two parts to the equation there. It's like when you talk to people about the gold area. There's paper gold and then there's physical gold. The physical gold side is massively bullish because there's not enough physical gold, and any bars that come out are bought, by governments or by individuals. But the paper gold market is being depressed by the central banks and by short sellers, and so it's a dichotomy that's between the two, physical and paper. In the case of oil, physical oil and both paper oil are both sitting with record speculative holdings. Between the Brent futures by speculators and the WTI holders of CFTC data, we have 1 billion barrels of oil held by speculative accounts in the paper market. They have between 250 and 300 million in the actual physical market long by speculators. Now, most of this is owned on leverage, where they put money down, and of course, if the price reacts and goes up 10, 20%, they're laughing, and all the way to the bank. On the other hand, today's action is not helpful, and if we bust 46 and then bust 40, they're going to be in a lot of pain. In 2009, speculators went from massively long in 2008 to net short in 2009. I don't know if we get to net short, but I do believe that there will be a crisis here, and the speculative longs will have to put up a lot of capital or get out of their positions, and I think that will happen. Just reversing that, talking about the commercials are sitting with almost 500 million barrels short in the paper market, 498,000 contracts last week, up from 457 the week before. And the record level for commercial shorts has been over 600,000 contracts. So the commercials are saying the price of oil is too high, and they're the refiners and people who use oil, and they're saying we're going down. And speculators have been buying the hype of OPEC, and they're OPEC saying, we're going to have inventories come down. Price of oil isn't going to break 50, and we're going to 60 and 70, and happy days are here again. Well, today we're at 48.50 or so, and OPEC's only talking about a 3-month or 6-month extension, and they're being told by Russia they're not going to play ball. Iraq is already saying they want to increase production because they're paying for a war, and then they're going to, if the war is over and they get back Mosul, they're going to have to spend a hell of a lot of money, or tens of billions maybe hundreds of billions to repair and rebuild their economy. You know, the Marshall Plan for Iraq alone would be bigger than anything that was spent during the post-Second World War period to rebuild Europe and turn it into a thriving, successful economy.
In theory, are there seasonal trades in the oil and natural gas markets?
There always is seasonal trades. The biggest demand period is the winter, and then the second is the summer driving season. So we see, rallies that occur seasonally because of that, but it's also related to the inventory situation as well. So you can have lows, in early in winter, let's say, which we did in late 08, 09, and we had in 2016. And then you can see peaks in prices that occur during, the summer months when you have because of issues related to strong demand, and we've seen that happen in the past as well. So, you can't really say that you're going to have the highest prices in the winter, the lowest prices in the shoulder season. It all relates to political events, how much inventory there is. In 2008, 2009. The high price was January, February, March, April, May, June was when we had the 147, and the low was in March at 33.55, and the low in 2016 was in February.
Natural gas is an election issue in BC. What do you see ahead for the natural gas market?
Well, we trade at a lower prices because we're stranded. We have, egress to eastern Canada. We have egress to the United States, so both the west coast and this central part and the east coast. But because of transportation, the netback at the wellhead in Canada is lower than it is for U.S. because the U.S. is closer to the markets. The U.S. also is having a massive expansion of LNG. Right now, with the projects that have been approved by FERC, the U.S. potentially in the next 3-4 years will be the largest LNG exporter in the world. So if that happens, then the price of natural gas in the States will rise as more and more goes to the export market, pricing the domestic market higher. We're already starting to see that natural gas consumers in the U.S., industrial consumers, are already complaining that they don't want the price of gas to go up too high because of the LNG exports. In Canada, we have stranded gas in BC, Alberta, and Saskatchewan, and we really need egress transportation routes to Asia. The shipping distance between the BC coast and Korea, Japan, and China is much less than from the Gulf of Mexico. So we do have, certain advantages. The problem is we still have not resolved the native land claims. We haven't resolved the environmental issues. I know the BC election, this is a big issue, and hopefully at the end of it, there is a positive resolution and there is approval of projects, and that if there's the Canadian production is about 15, 16 BCF. And right now, I think we consume about 6, so we ship the rest to the States. If we could get export capacity of 3 to 5 BCF that comes on sometime 2021, 2023, that would tighten up the price of Canadian natural gas and would make the industry much more profitable. And put this in the context of the government, it'll bring them in a massive amount of royalty revenue. So, everybody, job-wise, tax-wise, just logic of shipping, all of the things make sense for this LNG to go forward, and yet we seem to have an idiotic approach to it, and we continue to shoot ourselves in the foot, which, of course, has not been good for our economy. And I hope, the BC election, the issues are clear enough. And natural gas, you want the countries buying the natural gas to use it rather than coal. It is much smarter for the climate world, on the whole planet. So, the people saying, they don't want ships because of whatever on the coast, and they don't want to be using fossil fuels at all. Well, the problem is places like China and India and other places can't afford to totally go to, renewables. They're going to use fossil fuel, and the choice is, do you want them using dung, or do you want them using coal, or do you want to have them use our fuel-efficient natural gas?
How is the Alberta oil industry doing under the Notley NDP government?
That one I'm going to pass. I think that there is so much unhappiness over what's going on, and the price of oil in the 50s helps out to lessen the negative issues. But if I'm right that the price of oil goes down below 40 and goes down to the 30s, the fiscal picture for the province is going to get much uglier. And I think the right, which has talked about uniting, will hopefully be smart enough to do it. And then the pressure will be on to bring rational policies by the NDP Rachel Notley government, as well as by the pressure from the industry because of job losses, bankruptcies, and one of the big problems is you have the LMR issue, which is the abandonment liability issue, and every once in a while you see an article of companies that have gone under and have left that and bagged the government saying, you pay for the cleanup. That LMR issue can be very, very big in the years ahead because, companies may have put on the books $50,000 to repair a well. If there's some problem with the water table and there's been some pipe breakage or leakage or rust, that could cost millions of dollars to repair. So a lot of companies that are with high LMRs and abandonment and large well counts on their abandonments, they could suffer significantly as they have to. The government pushes for them to put up more money or start spending more of their cash flow on abandonments versus spending it to bring on new production. So there's a lot of you can talk about positives when we see a new energy bull market 2018 to 2023. But if I'm right that we have a lower price environment heading into the end of this year, a lot of the problems that people talked about in 2016, 2015, and 2009 are going to come back, and I think we will see companies with excessive debt, covenant issues, and not enough cash flow to replace declines fail.
Does OPEC still wield power in the oil market?
Oh yeah, they're the swing producer, and at some point, if we have 1 million barrels a day of demand growth, even with more fuel efficiency by vehicles, and the hope of Uber having flying cars for us, using solar power versus fossil, is our Star Trek scenario. But in my lifetime, I don't see that being viable. So my view would be is that we're going to be seeing more use of energy. If it's 1 million barrels a day, then there's going to be at some point, because of the decline rates in shale and because of the low proven RLI, we are going to see demand and supply come back into balance. And then in future outlier years, the inventory glut will come down, and that will set the stage for a new lengthy bull market until we do things stupid all over again.
There's talk of a global recession. What would that do to the price of oil?
In recessions, if you go to 08, 09, it was quick and dirty. It was 9 months of pain, and then we had an economic recovery. If you go through an 80, 81, 82 scenario, then it takes longer. But recessions are in my book are good because they're healthy. They clean out the excesses. Those that have weak balance sheets that shouldn't be in business disappear, and the strong economic entities come out of it better than they were before they entered. So a lot of dumb money and a lot of hot money has come into the energy sector, be it private equity, be it hedge funds, be it speculative funds of other types, and as we talked before, speculative holders of energy by hedge funds and individuals is at over 1 billion barrels in the futures market. That kind of dumbness has to be paid for with pain, and my view is they're going to get beat up real bad.
Are you watching for potential black swans that may affect the oil market?
Yeah, there are some interesting black swans that could be positive for energy. And so when everybody says to me, Joseph, what about the black swans? You're so bearish, could any of these occur? And the answer is yes. And so you have to be watching the data, you have to be watching the information, and as the facts change, your view has to change. Right now, the facts are very clear to me on the bearish side. But here are a couple black swans. Number one, Venezuela. Venezuela's country is falling apart. They're producing about 2 million barrels a day. If something happened where there was civil strife and the production facilities got closed up because the workers won't go to work because they're upset about not being able to feed their families, then Maduro, and his staying in power days would be shorter, and you remove 2 million barrels a day from the production side. That balances supply and demand real quickly, and you could see the price of oil $70 bid fairly quickly if people thought that the length of time that Venezuela would be out would be of some significance. Second, if Iran right now has been helping Yemen, Yemen is a battlefield between Sunni and Shiite. The Saudis, of course, are supporting the Sunni members of the country. The Shiites are being supported by Hezbollah and by Iran. If they fire any missiles or fire any weaponry that could reach the oil-producing areas of Saudi Arabia, that would be a nasty wild card that would drive prices sharply up. And then the other one, of course, is Iran has these small boats and mines. If they were able to somehow block the Straits of Hormuz, going back, 10 years ago, we had a $5 and $10 risk premium in the price of oil because of concerns about this. So to me, there are black swans out there, but when I analyze each of the three that we've mentioned, I think Venezuela drags on because the Chinese and the Russians are big investors there, and they're helping them get diluents. They can move their heavy crude and sell it. And then you've got the issues I've mentioned in the Middle East, where of course Saudi Arabia and others are very strong militarily, and they're not going to let Iran go far. And this week, of course, you've seen Tillerson, the new Secretary of State, get pretty upset about what's going on with Iran, so the saber rattling is on, which means the American military is probably quite vigilant and is working to make sure that nothing askance occurs.
How can people find out more about the Schachter Energy Report?
Yeah, well, the yesterday was our launch day, and people can go to www.Schachter, SCHACHTER, energyreport.ca. We have two levels of subscription service. One is just the monthly product, which spends time on the macro side and then gives specific recommendations. We added 6 recommendations in our first issue. Going into the next few months, we're going to add more. We want to get up to 20 or 25 names in coverage between the large cap, small cap, and juniors, energy and energy service. And then we have an interim, we have the other product called Black Gold, which includes the basic monthly, also includes interim reports. So every 2 weeks you have something in front of you of what's going on. And then when we think it's time to pull the trigger, i.e. to be a buyer or seller, and here's prices that we think are attractive, then we'll send out something called an action alert. So for those people and who are more involved and want to be closer to the markets and want to have more specific information, the Black Gold product is there. Plus, once a quarter, we're going to do a webinar with the Black Gold subscribers, so they can then send questions and electronically send questions. And where we see a plethora of interest in a subject matter or a company, then we will respond in the webinar. So the two products are really available for those who are watching but and want to know more about the price of oil because their business or whatever are interested, and those that are closer to the oil and gas market and need more intensive involvement and intensive information, and then want to be made aware of when we are at inflection points on both the excessive bullishness or excessive bearishness.
Joseph, thank you so much for being on This Week in Money.
My pleasure, Jim.
My guest has been Joseph Schachter, founder of the Schachter Energy Report.ca. He was speaking to us from Calgary. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Gerald Celente, and Joseph Schachter. And thank you for listening. A reminder that at the end of the show, we'll have a company showcase update with Larry Reaugh, the CEO and president of American Manganese. If you have any questions for the show or for our guests, you can email us at info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm your host, Jim Goddard. We're speaking with Larry Reaugh, CEO and president of American Manganese. Larry, what kind of an update do you have for the company this time around?
Well, we put a release out, Jim, that has updated the what's happening with the project. We've completed the first part. We are already started on the second. These are bigger phases. And and everything that we've gotten to date has been, just super good for the company and the shareholders. You wouldn't know it by looking at the market today. We actually lost $0.015, and here we have a good release out. But the exciting thing is that every time that we progress this further, we get contacted by outside corporations that are either in the battery business or related to the battery business, are in the commodity sales business, are in the end user business where they use the product, not necessarily in EV cars, but it could be computers or anything like that. It's a sterling list, and people would be surprised if they saw it. And these companies will be performing due diligence on us over the next several weeks, and we don't know what's going to happen from there, but we do know that this cobalt conference is going to be a very biggie for the company. And why is that? Well, you've got the producers of cobalt will be there, but you also have all of the end users and the commodity firms that trade in these metals that are scarce, to say the least. And cobalt is definitely scarce. So we expect to, get a very good response out of that. We were invited to present, which is a great honor, because they only have that event once a year. And Norm will be there to, present the actual PowerPoint on the process. So as we move through, everything's getting better. Now, what do I think is going to happen? Honestly, I think that something could happen in a very short period of time. Cobalt has brought a lot of problems for the EV battery manufacturers, and that goes right through the whole works. Everybody that's using lithium-ion batteries is starting to feel the pressure. You saw that Apple is talking about not digging and buying anything that's dug in the earth, but looking at recycling everything. And Apple has some very unique applications for disassembling these particular devices that hold the batteries and getting the battery out. And I found that fascinating to watch, because we're going to be disassembling a huge battery, which is not going to require the extreme robotics that Apple's employing, but it really tells us one thing. It tells us that this recycling is not only great for the environment, it's showing these companies have a green, clean attitude towards the environment. It is also showing us that we have such a shortage of metals that these whole corporations could be in dire straits looking for a product. And, it's the one thing you can look at our process for. If it's lithium ion, it has the same chemistries as the EV battery. then we can recycle that cathode material. And that's really important to remember. So it's not just the EV batteries that necessarily need the cathode materials, and especially cobalt, but it's all your little devices, your computer, your laptop. But there's all kinds of phones out there that use the cathode materials, and they amount to billions in a year. So that adds up. But the reality is, we're in the right place, we're at the right time, and it's going to take a spark or something like that will set us into motion, but that spark is definitely out there. So I think the cobalt situation itself could set that off. Nobody's looking at recycling as a spot to get cobalt. We were mentioned in an article along with Tesla, in which Tesla was stating that their batteries have a 10-year life, and that it's going to be a while before you have enough material to make this worthwhile. But then Tesla's not the only car company out there that's using batteries. And then you got to go back and say, okay, what about the batteries that the ones they started with 5-6 years ago, and especially in the last 2 or 3 years? That 10-year lifespan is rapidly closing. To take a recycling project like ours, you're looking at about 3 years to go to commercialize it. There should be enough batteries to keep maybe certainly one, or it could be several recycling plants going, starting out. And then, the sky's the limit after that. I mean, you're talking about tens of millions of EV cars out there, and you're talking tens of millions of batteries. So it's an interesting aspect, and the reason I mentioned that we had a lot of NDAs that were either signed or in progress was to let our shareholders know that we are being contacted. We are being contacted, and that, in my 40 years experience in public markets and business, actually it's over 50 years in business, when you are contacted, that's the best opportunity to make a deal. And when you're banging on doors, you can bang on 1,000 doors and get them all slammed in your face. But when you are getting contacted, it means that you have to have something that people are interested in. So that's what we have. If you have any questions, I'd be happy to answer them, because that's in a nutshell what our release today talked about.
Larry, could you just recap for our new listeners exactly what American Manganese does?
American Manganese is a exploration development company that developed the process for reclaiming or recovering manganese, low-grade manganese material from 2 to 3% deposits, and we're successful in doing that. But the price of the metals that we make have dropped below what would be considered to be a profitable level. Probably the EMD batteries could be profitable at this time, but without doing a study, I couldn't really say that. Now, what happened was that Norm Chow, who's a genius and a super engineer, recognized that our process should be able to recycle the cathode materials in electric vehicle batteries. And after several discussions and everything, we said, well, there's only one way to show it, and that's do a proof of concept, in which we were very successful in last year, and we've completed that proof of concept this year. And yes, we can get out the different chemistries in lithium-ion batteries when it comes to lithium, cobalt, nickel, manganese, and aluminum. And that's a great breakthrough. I know companies have been out there working on trying to do something like that for 7 or 8 years. And here we come, just basically from an idea in late 2015 to raising some money to do the proof of concept by the summer of 2016, and here we are coming up to the summer of 2017, and that proof of concept's all done. And the patent's been applied for, and we're doing the work now to to actually nail down that patent as tight as we can.
Larry, where are you traded and how can people contact you?
We're traded on the TSX Venture Exchange under the symbol AMY. We're traded in the U.S. under the symbol AMYF. We're traded in Frankfurt under the symbol 2AM. Our website is www.americanmanganeseinc.com, and I can be contacted at LREAUGH@AMYMN.com, or you can phone me at 778-574-4444.
Larry, thanks a lot for chatting with us.
Thanks, Jim.
We were chatting with Larry Reaugh, CEO and President of American Manganese, on April 27th. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.